Good evening, everyone. This is Rodney with the Triton Wave Market Outlook for Monday, March 31st, 2014. And this is brought to you by Triton Wave Consulting, home of the Triton Waves. The Triton Waves are early warning market timing indicators used in all time frames in all markets worldwide. All right, let's start off. It's around midnight, 1 o'clock on Sunday, Monday, the 30th and 31st of March. The S&Ps have been well underway for the last 5 or 6 hours, and they seem to jump up six points, and they've basically stayed there in this range on the right-hand chart. They really haven't moved that much. They gapped up, and they've had like a 1 or 2 point range since the gap. But I wanted to take a look at this purple line right here, which is the 1272 extension that we've been looking at for weeks and weeks now. This is a weekly chart, and this is the 1272 extension. If you've been following me, you know that goes all the way back to 2007 to the low in 2009 in March, and we've been hovering around this area and it just can't seem to break up. It looks like things are fully priced, and it started to go down last week. This pop right here it looks okay to the naked eye. These T1 and T2 are kind of flat here. T3 is still growing. But if we look at the right-hand chart, what I mentioned last time was when it went down below zero. This is last Sunday right here. It just went below zero on the purple one, and a day later it went completely below zero and has been ever since. This is a lead indicator of what is about to happen. This is also trending down on T2, the same for T3. T4 is kind of flat because it has like long-term numbers in it. But it does not mean that this is exempt from, just because it's moving down, it doesn't mean it's exempt from, just because it's moving sideways here. This can still, it moves sideways here too, and a little bit down, and this took that's about a 100-point spill right there on the S&Ps. So I'm looking for this, as long as this trend line stays intact right here. It may move a little bit higher, but this is a reason to get in and short the rallies. And I'm fully expecting this to come down to 1833, which right now is about a 25-point move, but even more than that, and I'll show you on a 144-minute chart, it could come down and still be in an uptrend to 1781, which is let me see, it's 77-point move from here. All right, let's break this down. Let's make this the daily over here and squinch that up a little bit, and we'll make this 144. Okay, so actually this is the one. I'm going to change this to a day only. Let it load up there. My charts load slowly sometimes. Just a little bit of patience, we'll get it. All right, I've got it fully loaded. Okay, so on this chart, the 144 on the ES, this is just daytime trading only, not Globex trading. It looks like this is trending down. This T1 is below zero. T2 is completely below zero. T3 and T4 just started below zero in the last day or two. Actually, the last day. So that indicates to me that we could be, barring any major changes, we should see 1800, 1792 within the next 2 days. Now, granted, March 31st, it's end of the quarter and end of the month, so they may be a little bit buying on Monday. I see that all coming apart on Tuesday, Wednesday, and April 1st is on Tuesday, so turnaround Tuesday on April Fool's Day may be just a perfect metaphoric scenario. Okay, on this chart right here, again, if we look at the 144, but this time it's a Globex, so instead of like 3 hash marks a day, there's like 8 or 10. And you can see when the S&Ps came down here, they hit that magical major Triton wave right here, and then bounced off of it. So in this case, if you were short anywhere in here where T1 through T4 started to go below 0, then you got most of this move, and if you use this as a cautionary note to get rid of most of your trade, then you would wait for the next signal which crossed above here. So you could either play this for a bounce or you'd just lose out right here, but you'd get in right about here, and then it went below 0 right in here just before this collapse. So you could actually, even though you miss this first 25%, you're in at about 1771 to approximately 1875. So that did take a month to do, but this is like these are longer term charts that you can walk away from. So the peak happened on 3/9, and it's been going down to sideways to a little bit down. So let's look at some shorter term ones. This is a 3-minute. A 3-minute, just like a cash, it's not cash price, but 3-minute trading between 8:30 Central and 3:30 Central. But you can see pretty clearly these waves are giving off some really, really nice signals here, especially like right in here to catch this move. Now, granted, you have to use much smaller time frames to get these, like a 144 or 377 tick chart to get these moves. But we're talking about a like a 2-day trend that takes you from this point to this point, which is like right about in here. So you get that move, and this goes below 0 here, and you get this move all the way down to here. Bing crosses, this crosses up, and now we're starting to move down again. So we can use a shorter time frame just to see how this looks, and let's turn to a 987 to see if that helps us out. And where it went up on, let me put a 3-minute on the left-hand chart here. Whoops, let's get that. Let's change that to a day. So you can see as I move the cursor across the page, across the right-hand chart, right about to here, it only goes to this section here. So this entire move all the way across here is only to here. So if you wanted to catch moves like where to get out on the S&Ps once they balloon up like this about 20 points, all you need to do is turn for an exit point to a smaller time frame, which is the 987 tick chart, and that gets you in right here. And basically you're out at the end of the day, which was Friday at the close. Or you can get out here when it starts changing, which is right near the close or just after in the aftermarket trading. All right, taking a look at gold. This is the daily chart on the left-hand side. And you can see that it came right up to this peak at about 1400, 1390, 1396, right at the, let me see, that is the major Triton wave right here. This is the, I'm sorry, this is the minor, this is the major. So it hit the minor wave. Now that's one of the signals. When it came up here and hit one of these exponential moving averages, it crossed two of them at the same time. That was a clue to get out. Okay, when it came down here, this was one of the signals to get out also, but you would have to use a smaller time frame. You take out half and then use a smaller time frame and trail stops on below the major Triton wave here. But once you cross back above this wave, or look on a 9 or 55-minute chart, which is just 8:30 to 3:20, then you can, when you know that this is still above zero right here, when it's moving above zero, after it crosses down, hovers, catches its breath, and moves back up again, and T1 moves above zero, then you can refine your look down into the 55-minute, and this moves in right here, which is kind of like, well, it's kind of messy here. At this point right here, all right, let me get an arrow and I'll show you. All right, so this arrow, as T4 crosses above zero and starts heading up, that coincides with right in here, and that coincides with this point right in here. So you're almost at the dead lows right there, which is really nice. All right, so comes up and hits that point, which is the same as the 55-minute right up here, and then you just take that as an exit because that's a major interference right there. And then so you exit that and you look for an entrance point to the downside, which could be T1 here, or if you're a little more conservative, or even more conservative, or you can just get in, wait for this to happen, and then wait for this to happen. And the idea is that if this clicks in before this moves up, then it's a downtrend. If this moves up while this is still above zero, then it's an uptrend. It's pretty straightforward, and this is how I call them to all the people that are following me. All right, I'm going to go through a bunch of stocks here pretty quickly, just kind of like line of sight, just looking at them and see just a quick review of what's happened. Here we see Goldman Sachs taking it on the chin. The stock market is not going to go up if banking is going down. You can see that right here, while the S&Ps were making new highs somewhere up here, this was already on the downtrend. So we see this being down below zero. This in the next 2 days is going to be down below zero. All right, already this is moving down. When this moved down below zero right here, this was a 5-point play. We moved above zero right here. This is on the 55-minute. This is a 10-point play. All right, let's see if we can look at. Let's get this a little bit closer here. Let's look at the 21. See what we get. 21's not as clean. Let's look at the 5. What I usually do is I take a look at the daily, and then I put a 21 up here and play the 5 against the 21, or a 144, depending if the stock is active. So you can see that this sometimes when you're looking for an exit point, when this starts moving down, you need an exit point. You're not always going to know when the turn comes here. You start looking at a 5-minute graph and you exit right there when it turns up above 0. When it's choppy up and down below 0, you ignore it, you go to the next one down, and this you hit the dead lows. And wait for the bounce. Bounces against the minor Triton wave, and then moves down again, and we're just going to have to wait for the next signal. Alright, let's move to Apple. Apple's been giving some really nice signals. Let's look at the daily on Apple, because 21 doesn't look so hot here. Apple's been going sideways to down this whole market move up. Now, as soon as Apple goes below 0 right here, it's 109 right now. It may take 2 or 3 days to do it, but I'll expand this and you can see all these numbers: 32, 27, 22, 29. It's been steadily going down, and now it's 109. There's no reason to believe that these are very long-term waves on the daily. So there's no reason to expect why it won't happen just like this. Whoops. Why it won't happen something like this, and Apple could get crushed over a period of weeks. Right now, I'm a little more conservative. I'm just expecting 504. And you can see from the daily, some nice. This is a little bit late here, but this got you in just before the move up. Catch that, and then a move down to catch that right in here. And it's just starting to creep above 0. Right here, we'll have to wait and see what that looks like. We may have to be following T2 instead. Okay, on LinkedIn has this nice steady decline. I'm using the 144 because on the left-hand chart here, because the daily there just simply isn't enough data because it hasn't been around that long. But notice T1, T2, T3, T4 are all below 0. Now, when this hit below 0, it hit. You can see that right in here. It was like in the middle of the afternoon. Right there. It's the same, maybe a little bit before, but you could have gotten this entire move right here. So you take your profits when you can play it on T3. Take your profits when T1 goes above 0, and this is kind of like a sideways move, even though this is not gone below 0 yet. But since the 144 is below 0, then the 5-minute, then it takes precedence over the 5-minute chart. You use these for entries rather than the general trend. So I'm expecting this to come down even more, and it looks like this nice trend line come down here, just drawing a little freehand. At some point, I expect this to hit 163 in the next week to 10 days. Okay, taking a look at Baidu. Baidu had this nice run on the daily when this purple line completely moved above 0. Purple and white. Here's the white. It actually did it a little bit right here, but this was still below 0. But now it's and this was trending down also. But now this is like 1 loop, 2 loops, 3 loops, and it's moving above 0. This is above 0. This is an entry point right here, or if you're a little more conservative, you can wait till right here, which is right about at 104. It went all the way to 180, and now the daily is has moved below 0 in the past 2 weeks, and since then Baidu has been slaughtered. Basically, it's selling for 150, it was 190. Okay, so looking smaller term, shorter term rather. Um, it looks like it's been following the minor trend line all the way. Every time it comes up, Bing goes down, Bing goes down. So sometimes you know, if you get up early enough in the morning to follow this, which if you're a trader you should, then you get the immediate like 10-point move, and you just cut it loose and wait for the next signal. Next signal is here, but based on what's going on the left-hand chart on the daily, you should be more reticent about taking longs here. But what you are looking for is this upside resistance, and just play these upside resistance moves. So we can find, you know, like smaller charts like right here to get in, try to get in and out. Here's a nice move right here, which is in concert with what was going on in the 5-minute. Let me see if we have a 144, if that loads quickly enough. No, that's going to be too slow. So basically we're looking for really small day trading moves. That's where you would get in. Looking at Google, Google had it looked like it was going up and up and up, and all the waves were moving up. So if you want to look for when something like this is going to happen for a turnaround, you have to move into smaller time frame charts. So it basically started here. Actually, it started back here, back in here, just before the top, and then the top happened right around T2 rather, and then came down to the minor wave, bounced up, and any time you have any kind of matching top or 50% retracement or 618 retracement, as long as these are below 0, you can jump in there. So this was like a cascade, bing, 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 and if you're a long-term short, then you basically would ignore this. You would take a little bit of a hit like here, but look at what you're getting as a reward, as this T3 goes well below 0 and T4 goes well below 0. Looking at Amazon, Amazon right up in this area right here. Let me get a pointer. This one was kind of like off the charts on the 21, but this on the 21 right here, that's T2, T1, T3, T4. This is a perfect example of cascading waves one into the other. Before T1 had a chance to go up, T2, T3, and T4 followed to the downside. As long as it stays down and follows the 55 here and the 21, then it'll go down, sideways, and this peak right here was this peak right here, which was between a 50% retracement of this move and a 618 retracement. So that's a perfect place to get in. And now that it's below 0 on the white wave and on the purple wave, now as of Thursday and Friday, this is completely below 0 on T1. So that makes any kind of retracement, if it happens that Amazon blows to the upside like 12, 13 points and either hits 343 or even bounces up to 351, that is definitely a short. All right, and finally let's take a look at Tesla. Tesla had a very, very nice run. This is the 144 because again Tesla doesn't have enough data, being a young company, to fill up these waves. but you can clearly see that on the 144 it went below zero back in October, and then hit hit the minor wave. Next signal was above zero, and that went from 150 to 250 or 260. Nice move if you just wanted to get in and walk away for about 4 months. Now, we are one step away from being below zero. This is 0.25. Opening trade tomorrow, this should be below zero, which could see an official downtrend on Tesla for at least the next 2 to 3 weeks. On the shorter term, we've already seen that happen right here. Being T1 flowed into T2, into T3, into T4 on the 21-minute chart right here. So, when it goes above zero right here, you can basically ignore it if you're a longer term, because these are sustainably below zero, and then when this goes below zero, it's in the direction of T2, T3, T4, and in the direction of the daily on T1. Actually T2 and T3, T4, even though they haven't gone below zero, they are all directionally down. So in summary of the market, actually I could bring up a chart. Let me hang on 1 second. Okay, so to summarize what we've been talking about, this is the NASDAQ over here. You can see it hit a low back in February, and so did the ES. In the meantime, it took out this high. It was kind of like this is about a 1618 extension of this low to high. This is about a double extension on the Qs on the left-hand side, or not the Qs, but the NASDAQ composite. But you can see that this is getting slaughtered to the downside right here. These are all the high flyers. Well, the ES is moderately going down and then sideways. This went down, this flushed down, then went sideways, and then really took a. While this was going sideways, we're talking about Apple, Netflix that got hammered, Baidu 6-7 points at a time. So the market in general is not going to go up without the banks and without the NASDAQ moving with it. So in other words, NASDAQ moving down is a precursor to the ES moving down and the Dow, and since this is below zero right here, I am completely betting this on the downside. That's all I have for tonight. Enjoy trading. This week should be very, very exciting, and good luck trading. I'm going to leave this up with you. This is my blurb on gold. Whoops, hang on 1 second. Okay, if you want to participate in being part of Triton Wave Consulting and to be a member of the team, you can read this, pause this, and I'm looking for experienced traders. I will give you the signals, and you have to know when to get in and when to get out. If you want to get in touch with me, just email me at tritonwaveguy @gmail.com, and the address is right down here. So, good luck trading, and I will see you at the next update.